And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and happy Monday to my fine futures family and friends here. Welcome to the market prep for Monday, January the 23rd. My name is John Hoagland. As always, thank you for trusting me with your time. We are going to focus on trying to find accurate context, always thinking about risk management and staying patient in our trading today. If you're already in the markets, hopefully you've found things going your way. Very low economic numbers due out today. 9 o'clock, the leading indicators or index is due out, not expected to be too impactful. So we come into this morning looking at the equities and the stocks, kind of steady to higher. This week's economic numbers, the major ones, are likely to be viewed as by investors for signs of Fed movement in next week's FOMC meeting. So just to take a look at what we're looking at as far as economic numbers for the rest of the week. Tomorrow we've got the preliminary PMI. This is the preliminary number again. It may be relatively impactful. Everything is all about inflation these days. We also have the Richmond Fed Manufacturing Index. There's a couple of bill announcements. No talking Feds for the next 2 weeks because we are 2 weeks from the FOMC meeting. So they have a gag order, so we won't have the benefit of their wisdoms throughout the trading days for the next 2 weeks, or at least the week and a half. Wednesday, really the EIA Petroleum Status Report is the only thing that I see that's looking like is going to be impactful, especially for crude traders. Thursday's the big one. We've got durable goods orders, the GDP, international trade in goods, jobless claims as usual on Thursday, new home sales, all of those coming out on Thursday. And then Friday, personal income and outlays, consumer sentiment, the Michigan sentiment, and pending home sales. So Thursday is really the big one when it comes to economic releases. We do have the earnings moving kind of into the tech sector this week. We've got Microsoft Tuesday, Tesla on Wednesday, Intel on Thursday. As far as today's releases, we've got a couple in the afternoon that might be somewhat impactful here. Nothing really tremendous. It's kind of a short list, nothing really big. It all really starts tomorrow morning with Johnson & Johnson, Verizon, 3M, General Electric, Lockheed Martin, Raytheon. Those are all tomorrow morning, likely to be impactful. And then we finish the day tomorrow with Microsoft, Texas Instruments, Logitech, and then moving on throughout the rest of the week. We'll check in with those on the prep and the reflection on a daily basis here. Apparently, the U.S. debt ceiling is going to be a problem. It is going to be in focus as Thursday marks the limit to borrowing. Politicians are all crying and wrangling about what to do about the debt ceiling. Of course, they always seem to use brinkmanship when it comes to that, and we'll probably come right to the end and then raise our debt ceiling. I don't see that we really have much of a choice. The VIX this morning, largely steady, slightly higher, solidly at 20. The dollar index lower this morning, 101.95, just slightly lower, nothing tremendous. And the yield on the 10-year slightly higher at 3.52%. As always, hit the lucky like button. Share, comment, questioning, feedback, and heckling are always welcome, as well as love. Subscribe to our YouTube channel so you can get notification when we do go live. And I'm looking forward to another interesting, challenging, and hopefully profitable trading week for us all. Octoraps is the first one in the room this morning, winning the prize. Shaw, good morning. Caprice, Terry King, Jeremy, Don Clemens. Theo, haven't seen you for a while, Theo. It is good to see you back with us. Zach, good morning. Rooster. Zach, snooze. George Lacey is right at my feet, waiting for your hello. Lacey says hello back. Drop in open interest on Friday is a bit confusing to me. We're going to take a look at that, especially after a loss, a huge down day last week. Any thoughts? Yes, we'll take a look at that in the charts here. Rooster. Yes, I use the CME information to get the open interest data. We can take a look at that later on if that's still a question of how to locate that information. Jimmy, good morning. Alejandro, good morning. The Rooster. Yes, need to learn how to read that spreadsheet. So, Zach, Wednesday and Thursday at 12:30 Central, we're going to be doing a 2-day webinar on the basics of the market profile, a little bit deeper into reading the market profile, and we're going to be talking about the auction process. If you're talking about my spreadsheet, we're going to do a deep dive into that. Hopefully, you will be available to see that. But those of you that have been coming to group coaching have probably seen that already. And we got a really good example of how reading those tea leaves of open interest, volume, delta, direction, all of those things can provide us good information, good context for trades when it's good. It's not always going to be speaking to you just like every other indicator and tool in futures. Sometimes they work great. Sometimes they don't seem to help much. Jimmy Decker, good morning. Alejandro, Jules, Caesar, Denny, Sophie, Joel, good to see you. Serenity Trader, bon dias. Tom, my brother, good to see you. Buen dia. Rooster, we usually focus on changes when they aren't in rollover. Yes, good advice there from Rooster. Naveen, Brody, patience is bitter, but its fruit is sweet. Aristotle, that would be Aristotle. That's not me, but it is true. Mike, good to see you. Sarah Hall, prayers and love. JM, Vince, my guy, good to see you. Frank, Rusty Golfer, Charles, DA, JD, good to see you this morning. Dr. VJ, Andy Bleed, Zeke. How can we see John hypothesis in the prep? Well, sometimes I do add a little bit of my hypothesis. But what I do here on the prep is really try and incite your idea of what you're seeing in the marketplace so you can come up with your hypotheses and move forward, and we'll see how that works. Zach, I can certainly kind of provide a primary hypothesis in one of the markets every morning, and I think that's a good idea. We may be expanding this whole thing soon here anyway, so we'll be talking a lot more about hypothesis. Dowitzer, good morning. Sean, Andy Bleed. Has anyone tried Bookmap? Yeah, we've had people that are using Bookmap. We had Joe D, who was in the forecast and in the Make Hogue Money for a while. We haven't seen him this year. Maybe he's taking a little bit of time off. But there are folks that do use Bookmap and do use it well. But like everything, it is in the user, not the tool. Dan, good morning. Great Dane. James, JT, good morning. I got lost here. Jason, Haggle Matters. Good morning, Anissa, Trading Research. We never hear the term spending ceiling, right? Anthony, good morning. Michael Marcello, chart language. Jay Bremen, good morning. It's good to see you, Jay. Oh, it doesn't sound like much of a limit, right? Yeah, the U.S. debt limit has been increased 80 times in 70 years. Unbelievable, right? Peter, Kyle, I wish they would raise my debt limit. Of course, I don't want it to be in any debt, right? Deranged Medic, good morning. Kyle, good morning. Will, Shaw, Columbus. Gnostic, good morning. Jay. Jay loves Bookmap. There you go. Gnostic, good morning again. Good to see everyone. All right. We are going to jump into the charts here relatively quickly. As always, we do have Make Hogue Money today at 2 o'clock. We've got the group coaching session tomorrow at 12:30. And that's the early session of Make Hogue Money on Tuesdays. We'll have the late session of Make Hogue Money on Wednesday. Wednesday, we will be having the first half of the webinar based mostly on market profile information. A lot of you probably know market profile. Many of you probably do not. We're going to start with the basics and get a little bit further than we usually do as far as information about the market profiles. And then Thursday at 12:30, the second half is going to be based on the auction process, the features of the auction process, what I look for, and some of the tools that you may find useful moving forward. I think we're going to try and provide a kind of an outline of how I look at the markets. I start on Sunday night. I look at things with relative consistency every day so that I can ask of the market some degree of consistency. So should be a good webinar. I'm looking forward to spending the time with you, and hopefully you're going to get something out of all of that. And then, of course, Thursday, we have the early session of Make Hogue Money. And then we will have, of course, on Tuesday, the coach's playbook. On Thursday, the podcast on Thursdays. So lots coming at you this week, as every week here at Top Step. As always, we are always looking forward to your success. If this is your first trip to the market forecast, welcome. If your first trip saying hello, thank you for saying hello here during the market forecast. Let's jump in. As usual, I like to... Sorry, I hit the wrong button. All right, so as always, I like to look at 50,000 feet. We've got the S&Ps and the equities basically holding downside structure. So long time frame is to the downside. We've been testing this trend line here for quite a while. Zach. Somebody get Travis to take over, right? Yeah, I'm the gremlin today, right? So we've got the market showing lower highs, lower lows with relative consistency. We are testing that. So in the long time frame, we're looking lower. In the short time frame, we're in balance. In the medium time frame, I'd say we're in balance. In the short time frame, I think we're still trying to push this market to the upside, but again, it's somewhat balanced in the short time frame as well. Take a look at the 30-minute chart here. Let's go back to the daily here just for a second. Okay. Last week's high, last week's low. We had to push to the upside. Now, the question, I think, from Rooster was, we lost open interest on Friday. That's confusing. We would think that on a push off that low, we probably would have increased open interest, right? But we lost open interest of approximately 22,000. Now, that can be wrong. That's the preliminary number, Rooster, so it may or may not be absolutely true. But the fact that we lost open interest on that push to the upside would indicate this push to the downside trapped a whole lot of shorts. A whole lot of shorts. So let's look at the 30-minute chart here. So we have the big down day here on Wednesday. On Wednesday, 18th, 19th, 20th. On Wednesday, we lost a bunch of open interest. Long liquidation. On Thursday, we added, but only a small amount of open interest. It seems as though we just got too cheap. Buyers took over, and we had an event on Friday that created an imbalance through imbalance. So is this going to just end up being a repair up to this level? Or are we going to now see open interest coming into the long side? Is this something that we can expect, knowing that we've got important information on Thursday and next week with Wednesday, the FOMC meeting? I'm thinking I want to see this market really kind of establish a range to let me look for opportunities to fade that range, but I don't know if I'm going to get that. If I had a hypothesis for any of these markets, knowing that what we've got on Thursday and that what we've got next Wednesday, markets are going to be trying to put themselves in a position, participants are going to be trying to hedge or liquidate positions. I'm going to be reasonable with my profit targets. So I'm early in the session today, not probably going to be too aggressive, although it looks like we're opening with a gap. Do we have overnight inventory? Maybe a little bit to the long side, but not really. So look at what happened on Friday. We opened in range and in value. We said, well, this is a situation where we're probably going to be able to find better trade location after the open or as the day goes on. Well, after the open, we put in the low for the session, which is the IB extreme low, and then we started to kind of push this market higher and higher throughout the session. We fell into balance here. There was almost a ledge here. Now this ledge creates, I'm going to go to the TPO chart now. Here, hang on. So this ledge creates a short time frame mechanical level, a level where short time frame traders are going to be executing. They were taking that short. Every time they took that short, they got paid less and less. The stops of those short time frame traders were all right above that level. So we got a good push to the upside and then continuation where the market stayed out of balance till the end of the day. So where this says to me an important inflection level moving forward, if I'm looking for opportunities to buy weaknesses, the base of this spike right here, okay, the 39.54 half, the base of where the market really started to fall out of balance and then continued seeking balance, but never finding it by the end of the day. Another thing that this lines up nicely with is the base of this late spike here, 39.56 quarters. So this area is kind of target rich if price comes back to it. All right. So this was going to be kind of a dream level for me. Doesn't look like we've got any real momentum to get back down to that level. As a matter of fact, it seems more like we're more likely to repair what happened on Wednesday. We've got a kind of a high volume node here. We've got our point of control here. We're inside of that. You're going to try and stay patient, even though the market is presenting outside of balance from Friday, which fell out of balance. It's Monday. Mondays are typically not my best trading days, especially early in the session. So I'm going to stay patient today and look for opportunities as the day goes on. The market's out of balance. It is out of balance. There may be good opportunities early in the session, so I'm going to resign myself to really try and stay patient. Wait till something says to me, this is your opportunity, and it's cheap. That's what I'm going to be looking for. Take a look at crude oil now. Crude oil added 2,000 in open interest on a push to the upside. It is now holding outside of a previous area of balance. We're no longer dealing with rollover. The longer time frame structure is still to the downside. Medium time frame is balanced. Short time frame is higher. We're going to need to bring in new business above last week's high and this weekly kickoff high if we're going to see price continue to the upside. What are the odds of that? The White House pretty much flat out says they were going to buy crude at 70, and they never even got the chance. They tipped their card there. I was looking so forward to having another opportunity at an execution. That may have been enough to turn me into a swing trader, but we never did get that opportunity. So we're looking at possible increases of China demand for crude oil. That's been in the wind for a couple of weeks. We're a little expensive here, and to say that we see excess high here on Wednesday, we're in that excess. We're looking to see if we can continue to accept at higher pricing. Adding again 2,000 in open interest, rollovers now over. Volume and open interest through this whole rollover and since has been healthy to the upside auction. Again, we're at an area we're going to need to bring longer time frame traders into the market to continue this move to the upside. Here's the 30-minute chart. Overnight inventory is long. We have opened with a gap. We've now tested to this point of control in regular trading hours. We've got last week's high, another point of control, and weekly kickoff high above, which are really kind of closest visual areas for the market to come back and return to. So if we get gap rules, if we can't close the gap, we're looking for opportunities to go with the gap, which would have us looking for opportunities to go long. This market opened all the way down here. So if we do close the gap and get into range and inside of value, the value area special situation play could bring us to a little value low from Friday, which puts us down to about 80.81. 80.81. 81. 81 is last week's weekly kickoff level. So there could be some support down here if given the opportunity. Looking like we've left the opening range at the high of the session here. And we have. Here's that first minute, 27 to 50. So 23 tick opening range. Not too bad. And we're seeing sellers in control right off the open here. Those could be the short time frame long inventory traders. All right, let's look at the NASDAQ. Similar but different. Of course, the longer time frame structure is lower, medium time frame balanced, short time frame balanced, but this market held up much better than the S&Ps did last week. S&Ps got a much deeper pullback according to the technicals that we're looking at here. We added 6,300 in open interest on Friday. Rooster, that's what you were probably looking for in the S&Ps, and it happened in the NASDAQ. S&Ps lost open interest. NASDAQ gained open interest. Those are some good things, I guess, happened in tech land. Not if you work in tech, but if you own stock, it was a good week for tech last week. So now we've got tech earnings coming out this week, starting tomorrow. So we've got all those to look forward to. But the upside auction is presenting as stronger in the NASDAQ than it is in the S&Ps. Take a look at the 30. So S&Ps, we're about here in Thursday's range. We've already reached our high volume node up here, and we're not even open yet. Open overnight inventory long mixed, looking like we're not going to open with a gap here. We got last week's high much closer in the NASDAQ than the S&Ps. We got weekly kickoff. We got a lot of space above here if we can take out last week's high. So again, we're kind of dealing with a late spike kind of situation. This ledge here was a short time frame level for short time frame traders to short against, and once that didn't work anymore, they hit their stops and went the other direction. So again, this level here is important in the NASDAQ, but not in the same way as it is in the S&Ps. If you remember looking at the S&Ps and on the profile here, okay, this is the NASDAQ. Here is that base of the late spike that we could call a late spike on Friday. In the S&P it's the base of this late spike to the downside. But again, the NASDAQ presenting as stronger. So if we get the opportunity down here, that's an interesting spot for me, of course. Initial balance low is the extreme low of the regular trading hours session. It's a trend day to the upside, double distribution, then continuing to the upside out of balance. And again, the market is, by technical reasons, opening out of balance because it's opening in this area of imbalance. In the day time frame, is it out of balance in the short time frame just yet? Daily. No. The day time frame is out of balance yet on Friday. Overall, it's in balance. Watch the extremes. Stay patient, as Aristotle says. Okay, gold. We added 5,400 in open interest. It's actually an up day. You'll see this in the charts. I'm saying that even though it looks like a down day here, value was higher. It indicates that we added open interest to the upside. One of the things that scares me a little bit for longs here, our areas of balance have gotten closer together. We got an area of balance here. We've got an area of balance here where there's a little space up to this area of balance. Now we're setting another area of balance that's overlapping deeply into the previous area of balance. This whole thing about balance and imbalance, right? It seems as though this market is losing momentum on this upside move. Losing momentum. There's plenty of money out there. New buyers could come and reignite this upside move. Again, adding 5,400 on Friday. So this was, well, our settlement price was here. We closed higher. Value was higher. Open interest was higher, indicating, well, the market is doing pretty well on the way up, right? Again, the fact that we've got overlapping values, overlapping ranges of balance is scaring me for longs. And now look what we've got going. We've got a open in range, rejecting range, coming through this point of control. Last week's low is the only target that we can see visually down below us. So I'm looking for a pullback here. I am looking for a pullback in gold so we can adjust inventory and maybe keep this upside move going for all of you longs out there. Here's the TPO chart. So it always seems like I'm late with this, but this is a pretty prominent point of control. The initial balance was neither the high nor the low. It's a normal variation trend day with the point of control right in the middle, and it's a prominent point of control. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 TPOs went to this price on Friday. That's a very comfortable level, but the market has used its ability to facilitate trade here and is now seeking different levels to facilitate trade. We've left the party here. We're seeking a new party somewhere else. Anomalish. Okay, single TPOs here. Excess at the low here. We're seeing a lot of excess on the way up here. We don't really, do we see any weak highs here? We still have excess at the highs. Not looking for a major move here. Just a pullback to even out inventories would be good. Euro. All right, well, we get a test of weekly kickoff high in the overnight. Rejected. Why? Because the major players weren't there to adjust inventory when it happened. We got too long and short time frame. We came back off. Friday, we added 2,500 estimated new contracts in open interest. We're still range bound here overall. So that rejection up above in overnight is kind of pushing price back into balance. Take a look at the 30. So we have overnight, we started here, got a little jump there, huh? Where are we? Well, we got too long. We were up against resistance. We came back lower. We opened, we closed the gap. If we show acceptance inside of Friday's value area, we could bring price back down to this level. Again, it's all about acceptance and correctly assuming acceptance to take advantage of the value area special situation play. Largely, we're in balance. Look at last week's high, look at last week's low. We looked above, we rejected. Are we going to return to the low of last week? Hello, dead letter opener. It's good to see you. Here's the 10-year. We got rates continuing to kind of leak to the upside, or actually to the downside here. Hang on one second. Yeah, rates creeping to the upside. They're back up around 3.53% right now. And we know we've got the FOMC meeting next week. I'm going to have reasonable expectations for all my trades, unless something changes. Short time frame upside structure does remain for now. 30-minute chart overnight inventory to the short side and seeing some continuation. I don't want to fight this move to the downside without some sort of structure. Last week's low looks like it might be an interesting spot. Here's the TPO chart. The initial balance high is the extreme. Opening, leaving range, short time frame downside structure. I am really just going to be patient, and if I were going to be trading the 10-year, I'd be looking down here in this area of balance low and up here at this area of balance high, because I'm not seeing, if we are in short time frame control, which we did lose 9,800 in open interest on Friday, I need to see some shorter time frame levels begin to hold. I mean, we do have the low here from Tuesday at our current low, but that's kind of a weak spot. I don't really like that. We got a couple of naked points of control above, one down below here. I'm going to kind of mothball the 10-year if I were going to be trading it, because we are so close to the FOMC meeting, and a lot of traders are going to just be kind of hedging and, you know, kind of managing their positions in case something wacky happens. All right, here's the our little pet project in Nat Gas. We tested to a weekly kickoff low, and it remains the same this week. Short time frame structure, certainly to the downside. I'm looking at last week's high as a break of that structure. If we get there, we added 1,100 in open interest on the last move to the downside here, feeling like we've trapped some shorts down here in the natural gas. Here's where the day ended on Friday. I mean, it took a look. We closed above it. Now we've got a gap higher. We've got overnight inventory long, which is now being reconciled. Again, an opportunity for us to perhaps see a value area special situation play that could bring us back to value low from Friday. Or are we going to see the market fail to close the gap and continue the move to the upside? if you've got to go pretty far back if you're looking for any visuals below price here, and there's plenty above. Plenty of visuals above. Here's the TPO chart. Initial balance high or low. No double distribution trend day to the downside. No late spike. Doesn't matter anyway. We've opened flat out above the range and above any late spike assumptions down here. Market so far is showing a rejection of lower pricing. Rejection of lower pricing. We'll be looking for opportunities perhaps to buy weakness. So that is kind of an early week, early morning look at these markets. It's been my experience to be really extra patient on Mondays. I've probably missed some good opportunities on a lot of these Mondays. Actually, since the beginning of the year, I've been able to find some pretty decent ones, but typically, it's a kind of reacclimation on Mondays, at least for me, because I've had a couple of days off. I've been focusing on other things. Of course, my mind is always to some degree on markets. But it sometimes takes a little bit of time on Mondays to get a really good idea of the context of the market. What is the market telling us today? Yes, natural gas closes at 1:30 Central Time. Kevin, every Friday this month has been pretty much straight up, followed by a Monday that has been an hour pop and then a drop. Will that continue today? We don't know. Stay tuned to As the Market Turns. So, we don't know. So just, try and stay patient. It's Monday. It's a long week. We know we've got some pretty important information coming out on Thursday. A lot of traders will be hedging or positioning themselves to protect themselves against anything happening wacky on Thursday. Next Wednesday, FOMC meeting release. Of course, traders will be hedging and positioning themselves to protect themselves against anything wacky that happens on next Wednesday. So just kind of looking forward, what does that mean for our trading today? Today it means I'm going to be reasonable with my profit target expectations. Maybe have reasonable expectations for the next week and a half here. Other than that, looking forward to seeing you for Make Hope Money today, and then the market reflection at the end of the day. And if you have any suggestions, feedback, anything that you'd like to add for market profile, market prep, market reflection, any of the things that we do, send that feedback to me, jhoagland@topstep.com, JHOAGLAND @topstep.com. Thank you for joining me today. Take your deep breath. Stay humble, grateful, creative, and centered in your trading today. If you find yourself on tilt, it's hard to make anything beautiful when you're not centered. So get out there and profit today. Trade well. Look forward to seeing you for Make Hope Money, and blessings. We'll see you later. Have a